Hey everybody, welcome back to the channel. My name is Justin, and in this video, we're going to take a look at my stock portfolio for the month of January. I compare my performance against S&P 500. I think that's a good benchmark to compare my portfolio performance to make sure that I'm actually beating the S&P 500, because if I'm not doing that over a long period of time, it really doesn't make sense for me to pick my own stocks. I'd rather just put them into a, say, S&P 500 ETF like a VOO from Vanguard, which just mirrors what S&P 500 does. So I used to do these videos all the time, every single month, and I stopped doing it for a while. I'm going to try to get back to it this year, kind of see how it goes. So hopefully you get some value. As if you like these type of videos, hit that like button to know, or let me know if you like this kind of content or not. If you do like it, I'll continue doing it going into the future. So let's just jump in, take a look at my portfolio, and then see how well it did for the month. All right, so you can see my portfolio here on the screen. So the ones that are in blue, just so you know, these are new positions in February. So these were not in my portfolio for January. So just keep that in mind. That's iRobot and then Baxter International. And if you're wondering why I bought those stocks, I'm not going to say it on this video. I do have a Patreon, so if you're interested on what I think about these stocks or what I think the margin of safety is, I do post on Patreon and kind of let my Patreon members know what I'm buying, why I'm buying it, and all that good stuff. So you can go check that out in the description below if you would like to. But this is my portfolio as of right now, as of today, middle of February. And you can see this column right here is actually the percentage change in the portfolio on that particular stock in January. So for example, Ally Financial, it was up 33% in January. Some other big ones for that month were Warner Brothers Discovery, that was up 55%. Meta was up almost 20%. Celanese was up 20%. Micron was up 20%. Netflix up about 20%. Carvana was up 120%. Generac was up 23%. Polk Group and My Homes both up over 20%. In fact, there's a couple of stocks that I ended up actually selling here just recently that were part of the home builders, and those couple stocks I sold too were up about 25 to 30% in January as well. So I had a really, really good month overall. So the S&P 500 was up around 6% for the month of January. And so how well did my portfolio do? Well, it was up 26% in the month of January. So obviously up 20% more than S&P 500. So obviously really good, but that's only 1 month. It really doesn't mean a whole lot in the scheme of things. It really matters what I do over the long term. So I'm going to keep tracking this each month, kind of see how things go. But it was a really, really good month overall. And again, really the big hitters were Ally Financial, Warner Brothers, and then a lot of the home builder stocks really, really did well in my portfolio overall. And it's kind of interesting because I've said on Patreon, even did a video maybe a month or two ago on YouTube and mentioned that I bought a bunch of the home builder stocks, and I got a lot of pushback from that. A lot of people didn't understand why or what the reason was for buying home builder stocks. And a big reason why I looked at it was, even though that interest rates have been going up, a lot of the supplies are costing more money for home builders, there's still a huge demand for homes. So if you go back to July 2022, it was the lowest number of homes on the market in the last 42 years. Every single month, every single week, there are new home buyers coming into the market. And there's a huge demand homes at this time. So even with interest rates going up, there's still a strong demand there. So I still thought the home builders would do better. I thought they got knocked down way too much by the market overall. And so far that looked to be true. And I've done a lot of movement in my portfolio over the last year in general. And for me, it's really changing my mindset on how I want my portfolio to look, and really comes down to risk management overall. In fact, I started reading a book here recently, I'm almost done with it, by Howard Marks, called The Most Important Thing. phenomenal book. If you've never read it, highly, highly recommend it. And the most important thing, really the whole segment around the book, or what or Howard Marks really focuses on, is risk, and really trying to lower your risk as much as possible without sacrificing your returns overall. And for me personally, when I look back over the last year and a half, there are positions that I got myself into where it was just too high of a risk. And Howard Marks talks about really two ways about putting your portfolio together. You can have an offensive type portfolio, or you can have a defensive type portfolio. So offensive, might be having a smaller concentration of stocks in your portfolio. So maybe say 5 or 6 stocks, and you're looking for those big winners. Maybe you're looking for a stock to hopefully double over, the next year or two, where like a defensive type of portfolio is minimizing the risk. So you might have a larger portfolio, maybe 20 or 25 or more stocks in your portfolio. So definitely more diversified overall. And you're not having a lot of stocks in your portfolio that are really consider like higher risk stocks, maybe companies that have really bad balance sheets. Maybe they don't have any income on their P&L, at least historically, that they haven't. So for me, it's just trying to get to a position where, I might have some offensive type stocks in my portfolio overall. I'm trying to kind of change my mindset and my portfolio to be more on the defensive. So my portfolio may not do as good with bull markets. So maybe the market is up, 25% in the year. My portfolio is probably not going to be up that high. But on the downside of that, on a bear market, hopefully my portfolio is going to weather the storm and do better in that type of scenario. And Howard Marks talks about it's easier from his standpoint on trying to go the defensive route. You be more consistent on that. If you go offensive route, you can still be highly, highly successful, but you're probably going to have a lot more losers, and losers are probably going to hurt more. But hopefully you have some winners that over or counteract those losses overall. So hopefully for me, I have less losses, more winners, but it may not be as big of gains compared to the market, especially in a bull market overall. But in the end, hopefully still beating the S&P 500. That's my goal. I'm also one that knows how to value companies, how to value stocks. I try to buy stocks that have a discount or a margin of safety, or what Warren Buffett calls the margin of error. I kind of like that verbiage a little better. So I'm trying to buy companies at a discount, and then if they run up and it's well over my intrinsic value for that company, then I can sell portions of that. And again, that's kind of minimizing my risk to my portfolio overall. And if you don't know how to value a company, how to value a stock, it is absolutely critical on knowing how to do that. There are books out there that can teach you how to do that. Rule 1 Investing by Phil Town does an excellent job with that, for example. There's other value investing books out there too. I do offer valuation templates on my Patreon as well. If you're interested in that, I'll put a link down below. You can go check that out too. But you definitely want to know how to value companies, and you want to get to a point where you know how to analyze companies, analyze stocks, and being consistent with that overall. So be curious from you guys. What do you think my portfolio overall? Up 26% for the month of January. How do you think it's going to do for the rest of the year based on the stocks I have right now? What do you think about my 2 new stocks that are in my portfolio with iRobot and also Baxter International? Be curious if you guys have those in your portfolio too. Thank you so much for watching. I really, really appreciate it. I'll catch you guys on the other side. Take care and God bless.